My name is Rishad and today is the 2nd of January 2023 and I'm going to be making my weekly prediction for the week ending 6 January 2023. So last week the open high low close were 3843, 3858, 3780 and 3839 with a change of minus 3.95 and a range of 77.41 with the percentage of open being 2.01%. The volume was 6.806 billion, which is low because a lot of the days of the week were off in the market due to Christmas and New Year's. The spot price is 3839.49 and the March future is 3868. The basis is 28.51. So, for the weekly candlestick pattern, it is a long leg doji, which is a slightly bullish favoring decision and is regarded as a bullish reversal pattern if coming from a downtrend. And the daily candlestick pattern is a hammer. And for both the weekly and daily price action is a consolidation range. They're still in the same consolidation range as was defined earlier, which is 3878 to 3810. The trend line for the weekly is not applicable because there is no trend line immediately being made as it is going sideways, and for the daily it is going in a consolidation as I mentioned earlier. So the ADX, DMI plus and minus are 28.0442 and 19.0245 respectively, and the ADX is 14.9143. The RSI is 45.99 and 45.18 for the weekly and daily RSIs, and for moving averages, the 20, 50, and 200 week averages are 3880, 4067, and 3668, and the daily averages are 3833, 3865, 3912, and 3898, and 4008 for the 8, 13, 21, 50, and 200-day SMA respectively. For the Bollinger Band, weekly, the upper, middle, and lower bands are 4218.12, 3880.21, 3542.29, and the daily bounds are 4064.30, 3904, and 3744. Here, the immediate resistance and the immediate support are 3878 and 3809, which are the bounds of the consolidation range. Now, the next support and the next resistance is 3718 and 3919, respectively. Now that we've covered the option chain and some of the candlestick patterns along with support and resistance, let's get into the option chain. So, for the monthly expiry, the highest CE and PE are still 4,000 as it has been for the last few weeks, and there's no change in the PE or CE. The premium for 4,000 CE is 18.10, and the premium for 4,000 PE is 182.62, and the put to call ratio is 1.76. For the weekly expiry, the highest CE is 4,000 and the highest PE is 3750, with the plus 165 change in the CE and plus 150 change in the PE, which gives an ambiguous signal since it is a mixed signal with the bearish and bullish for the CE and PE, making it a negligible indicator. The 4,000 CE is 1.55 and the premium of the 3750 PE is 11, with a put to call ratio of 1.97. For the daily option chain, the highest CE and highest PE in open interest is 4,000 and 3,700, which is a minus 75 change in the CE and the minus and plus 100 change in the PE, giving a clear bullish indicator for at least the daily charts because the CE has moved below and the PE has moved up, showing that there are less call sellers and less resistance in general, and less and more put sellers, showing a more bullish sentiment as of the moment. So this can be taken as a short-term indicator for an upward continuation. A 4,000 CE premium is 0.05 and 3,700 PE is 0.32, and the put to call ratio is 2.26. Now, as of my actual prediction, considering the candlestick pattern of the long-legged doji, which is slightly bullish favoring considering the fact that it is coming at a downward reversal, but still shows a high level of indecision. And the daily candlestick is a hammer. So, taking these into consideration, it can be said that as of the immediate price action, there is a high chance that the market goes upwards, just purely based on candlesticks. Additionally, for extreme short term, the daily expiry date for the option chain shows a clear bullish indicator, at least for the 3rd of January, which is the first trading day of the week. Meaning that there's a higher probability that there is going to be a white candle formed on that day. Now, as of the weekly expiry and monthly expiry, they give no clear signal, so we can count these as negligible. The ADX has switched and shows a higher DMI plus than DMI minus compared to last week. However, the ADX line doesn't confirm this, as it's only 15, showing that there's not yet a clear established trend. However, it can be the start of a trend. Now, taking all these factors into consideration, I think that it's fair to say that it is highly possible that there's an upside in this week, but as of now, my main prediction is that it is going to stay in the consolidation range. But if it breaks upwards, considering the indicators given by the candlestick and the option chain on the short term, it would make sense that the consolidation range breaks upward. So, specifically, if the the resistance of 3878 is broken during the week, then it is very, very highly recommended to take a long trade, because compared to last week, there isn't really any big festival or any huge events this week. However, it is possible that if it does break this resistance zone, there is a low chance of a whipsaw, considering the fact that there is steady volume, good candlestick indicators. However, if it does break downwards, just something to be wary of is that there were two consistently upwards candles for the last two trading weeks showing a high bullish sentiment. So, well, my advice for this week is that it is most likely going to go upwards. However, once it breaks the resistance of 3878, then it is clearly an upwards prediction for me. However, if anything else happens, I will let you guys know, but stay tuned for that video. But as of now, this is my prediction, and I'll catch you in the next video.